How to qualify for a mortgage in 2025 if you are self-employed. Good morning, everybody. My name is Andrew Augustiniak from the Augustiniak Lending Team, and our team lends over 45 different states across the country. So if you need any help, we would be more than happy to help you. In today's video, we're talking about a very unique situation, but a situation that comes up every single day. Self-employed borrowers. And if you're watching this and you've been denied by a mortgage because you're self-employed, then basically you talk to a lender that didn't have access to all the different loan products. In our world, yes, traditional lending looks at your tax returns, your pay stubs, and if you're self-employed on your tax returns, you most likely write off a bunch of items, so you pay a limited amount of taxes, right, on that income because you have expenses as a business. But if you've been denied by a bank for a mortgage because you're self-employed, that meant that you wrote off a lot, so your income on paper wasn't as much as you actually make. In a common situation that comes up is I have a borrower who brings in, let's say, $200,000 a year. Initially, to them, they make, $16,000, $17,000 a month in income. But on their tax returns, they write off a bunch. And so let's say they have $120,000 in expenses. Well, then to us as a lender on a traditional loan, and this is the key word, traditional loan, they only have $80,000 in actual net income. So even though initially, they're like, hey, this is how much I bring in, on paper to the IRS, they only make $80,000. They may not qualify for a conventional loan, and that is why a lot of banks, traditional banks, or anybody who doesn't do what's called non-QM lending will deny that person. But folks, there is a plethora of other loan products out there, mortgage loan products to help you as a self-employed borrower purchase a home. We have loans based on bank statements. That could be 12 months of business bank statements where we develop an average amount of revenue brought into that business on a monthly basis. And then we may hit that with the 25% expense ratio. Let's take a borrower who makes $200,000 a year. Let's use that same scenario. On $200,000 a year, let's say they're averaging about $17,000 a month in income at a 25% expense ratio. That would be closer to about $150,000 for the year. And then that situation, they're going to have, roughly, $13,000-ish a month in income on a bank statement loan compared to that other scenario where somebody's writing off everything and only having $80,000 because let's say they wrote off everything and to the IRS, they only showed $80,000 a year in income. So that bank statement loan allows us to go off the actual revenue brought into the business and then hit them with a small expense ratio so they likely can qualify. So if you're self-employed, know that there's loans out there. We do them. We've been doing them for plenty of years and we know how to do them that allow us to go off your business bank statement revenue. Option number two, let's say that doesn't work. Option number two is we have loan products that will go off an audited P&L from your tax preparer or CPA or whoever does your taxes, an actual P&L. So we're going to take a 12-month P&L. We're going to look at that P&L. And that's how we're going to look at your actual revenue. And then if worse comes to worse, we actually have what's called a no ratio loan that requires a larger down payment, but has a much higher interest rate, but will still allow you to qualify for a home as long as you have the assets in your bank account. So folks, there are tons of different loan products out there aimed at self-employed borrowers to make it easier to qualify for a home. If you guys have any questions or if you are self-employed and you've been denied in the past, reach out and we would love to help you in your journey to purchase real estate. Guys, my name is Andrew Augustiniak and catch me on my next video.